Welcome to CATA TV. We're joined by Russ Roberts, CATA's Senior Vice President of Tax and Finance. Russ today is going to update us on recent changes to the SR&ED tax credit system. We have some significant concerns with some of these changes that have been made for all intents and purposes unilaterally. Russ is also going to review for us some of the steps we're taking today in order to address those concerns and to make the program the most efficient in the world.
CRA has just released over the last week or two about 15 new documents outlining how one approaches the program. We have gone through it working with a number of senior practitioners and experts in the field to understand the implications of these documents and what the changes might mean to the community. They are very significant. It is a different approach to the program than has historically been the CRA's attitude. It has previously been managed as an innovation program, and currently the focus seems to be more in shifting at least more towards compliance. Historically, the program has been managed from the point of view of it needing to work as an incentive. The current guidance that was just released and the associated T661 form, which is a requirement that everybody fills out to obtain the credits, is much more focused on compliance, establishing boundaries, setting standards, setting requirements that if one does not follow, could put one out of line with the credits, with the program. Currently, the program supplies almost $4 billion of credits to companies in all sectors, including IT. These changes and some of the policy changes that we read in the document significantly change what has historically been treated as eligible. It also sets a much higher standard for the documentation, some of which is not consistent with the way businesses currently are able to manage developments, particularly in the software sector and in the manufacturing sectors. Yes, I would, because these credits need to get to the firms effectively and with certainty. And one of the difficulties is that currently the program is considered not to be effective by almost a majority of the larger firms who claim it. The larger firms are claiming close to 2/3 of the actual incentives in a dollar sense. But they make up a much smaller portion of the number of claimants. Almost 4/5, 80% of the claimants are small companies claiming about $80,000 worth of credits. And what we think has happened is that the numbers of these firms, small firms, have gone up so significantly that CRA has had to change their approach to managing the credits themselves. And in dealing with those numbers, which are close to 18,000 firms right now, are claiming the smaller numbers. And it is a magnitude of numbers of claimants. It is the magnitude of the numbers of claimants that actually, I think, is a serious issue for CRA and how to manage that group. What they've done is mix one problem in with the larger firms, who actually are very skeptical and have shown to be skeptical about the effectiveness of credits. To the stakeholders, two actions. One is, I think it's very important for all tax managers who want to claim the credits to get their personal head around what's being required by CRA for the sake of their own firm. Secondly, we ask that they review the material and how well can they adapt to it. Does it affect the way they need to operate? If it does, and if it creates significant issues for them, we would ask that they bring these issues to the attention of CRA and government officials so that they can see the impact. What we're being told is that these requirements do significantly impact on the way businesses are going to be able to claim the credits, when they're going to be able to claim the credits, and what is the cost of doing so.